Hello, I'm Michelle Makori coming to you from New York, and we are back with Max Keiser, host of the Keiser Report. And Max, you and I were discussing hyper-Bitcoinization and how Bitcoin is being adopted more and more in South America and in Africa. So let's bring it back to the US, where I am. And we have Congress scrutinizing Bitcoin's power usage, even if the power is derived from clean energy sources. The House holding a hearing to get a better understanding of Bitcoin's power consumption and why it's needed. This coming after several national and international climate-related organizations sent representatives a letter claiming that proof-of-work mining could be hazardous to the world's climate in the long run. We're seeing similar issues in Europe. We have leading European Union financial regulators saying that the EU should ban Bitcoin mining, even if it's using clean energy. And according to some Swedish regulators, Europe will have to ban Bitcoin to hit the Paris climate goal. Now, Max, we've heard this before, but the climate change agenda is not going away. To what degree does this concern you?
It's a bit of a red herring, really. When you dig into the numbers, it doesn't make a lot of sense. So let's look at some of the numbers. So right now, Bitcoin uses about 1/2% of global energy. And that energy that it does use is mostly stranded energy or renewable energy. It's said that 60% of the current Bitcoin energy usage is renewable energy, and that number is growing. So the actual amount of energy that Bitcoin uses is minuscule in terms of the global energy usage. I call this to be a bit of a red herring because the ability to have money that is a separate state from money, and this is what Bitcoin does. You obviously, if you're a nation state or a central bank, that would be worrying to you, because suddenly there's a system of money that exists completely outside of your control. It's impossible to ban. China found that it was impossible to ban Bitcoin. India tried to ban Bitcoin. They couldn't ban Bitcoin. It's impossible to ban Bitcoin. The same way you can't ban P2P file swapping. Remember when that was introduced, and it totally transformed the entertainment industry because there was no way to stop P2P file swapping of intellectual property. And still to this day, it's an encrypted P2P file swapping that cannot be challenged or stopped. And Bitcoin represents an impregnable wall of encryption that no government can pierce. And you and your funds are protected by that impregnable wall of encryption that only you have access to, but nobody else, not a government or a group of governments or a military, has access to that fund. So it defies and challenges the status quo. And so they bring up this energy question because I think it's a way to get in the news, it's a way to get headlines, but it doesn't actually add up. With Bitcoin, it's incredibly energy efficient in ways that you don't find in other industries that are related to money. For example, the gold mining industry is nowhere near as energy efficient as Bitcoin, and certainly the fiat money world is a complete energy catastrophe. I know, we can say that in the United States. Again, let's quote Paul Krugman again. When asked what backs the U.S. dollar, he said men with guns. And what he's referring to is the U.S. military, and that's 1.5 trillion or more dollars per year of our tax money to fund the Pentagon to defend the dollar. That's their primary job. So and Bitcoin can replace the dollar, so that means you can get rid of that expense, that line item on the budget. Of course, if you're in the defense contracting business, that doesn't sound good to you. If you're a politician that is supported by defense contractors, that doesn't sound good to you either. So they create a lot of scaremongering around the Bitcoin energy usage. But when you dig down into the numbers, it's fallacious. There's absolutely no statistical, analytical basis for those scaremongering tactics. But the headlines scream at people's face and they just jump to conclusions, the way it is in the media business, Michelle. there's not a lot of nuance, is there? There's just a lot of scaremongering. So, but there's no substance to it. It makes no sense. In El Salvador, their energy usage is going to go up because the economy is growing, but their carbon footprint's going to go down.
Yeah.
It's going to go down because there's going to be Bitcoin mining. And that could be the same situation for the world. Carbon emissions on planet Earth from industrial usage by humans could be cut in half with energy, while energy usage goes up if we go to a Bitcoin standard. That's how efficient Bitcoin is.
Yeah, and to your point, we had the Bitcoin Mining Council recently established, which monitors that mining operations are using renewable or clean energy. And you could also say that renewable and clean energy power plants are being funded by the fact that they can then be used to mine Bitcoin. So it actually increases the demand for them. So I hear what you're saying about it potentially being a red herring. Nonetheless, there is a lot of political will to take that seriously because of the reasons that you mentioned, that it does challenge central banks. So in the very, very big picture, Max, is there anything that you see that derails Bitcoin? Is there anything that you can think of that crashes Bitcoin? If you had to really go out there, what is the biggest hypothetical existential threat to Bitcoin?
Well, no, I don't. I mean, the short answer is no, because it solves a problem that humans have had for hundreds of thousands of years. And that is a need to exchange value for value with other human beings over space and time. And so you have gold, which is great for exchanging value over time, but it's very bad to do so over space. In other words, it's hard to move gold. If you want to move $1 billion of gold to the airport, it's not practical. Fiat money, you can move it over space, suitcases full of $100 bills, but over time, it inflates away out of existence. So over time, fiat money is terrible. Here with Bitcoin, you can transport it over space and time, value. And so for humans that have had a need for this for hundreds of thousands of years, it's a way, it solves that problem. And once you understand it, once you adopt it, you never go back. It's kind of like the discovery of the wheel. Once you discover the wheel, you're not going to go back to just dragging your cart in the mud without a wheel, right? Once that discovery was made, and that's kind of what Bitcoin is, a discovery. It's not. It's just a combination of existing technologies that were combined in a way that hadn't been thought of before, that solves this problem of how do you create unconfiscatable, uncensorable value that can move through space and time without any problem. And so in countries like El Salvador, once they've got a taste of it now, they're not going to go back. They're not going to go back to the old way. Because they just would reject it, just like we're not going to go back to the horse and buggy, it's just, this is the way, this is the money now has been transformed. Michelle, over the past 40 years, as I'm sure you can appreciate, every single industry in the world has been transformed by software. And every company at the end of the day is a software company. Amazon is a software company. Chrysler Motors is a software company. All the medical technology companies are software companies. Software runs the world. The last industry where software transformed the industry was money itself. We were still mired in 100-year-old, 200-year-old technology. So Bitcoin upgraded money, and now it's contemporized with the rest of the software-driven world that we live in. And we're not going to go back. This is here to stay. We're not going to go back from here. Well,
let's take your metaphor of the wheel. We did start off with, say, a wooden wheel, and now we have Michelin tires, for example. So the wheel in itself has progressed technologically. Could you apply that concept to Bitcoin then, that there could be some better technology that will usurp Bitcoin, just like we've advanced with the wooden wheel to the wheels that we have now?
Well, the underlying design concept of the wheel was not improved upon. It's a round object that facilitates transportation. There's been modifications over the years, but that underlying fundamental leap of design of the wheel, this quantum leap of design, is still with us, and is the standard by which we look at our various modes of transportation.
So is that like saying the Lightning Network applied to the base of Bitcoin? Saying that essentially it's the same, but the improvements, for example, if we're going to go with that metaphor, just like the wheel evolved from a wooden wheel to what we have now, we have these adaptations, for example, the Lightning Network with Bitcoin.
Right. So to go to Bitcoin, the design of Bitcoin, it's a stack of technologies. There's the proof of work. There's a difficulty adjustment. There's various layers to it, and it's arranged in a way that's perfectly incentivized, and it does exactly what it should be doing. And there's no way to improve that basic structure. It does exactly what it should do, and there's no need to improve it because it does exactly what it states that it does, and at this rate at which it's being adopted, it's becoming ubiquitous. Just like the underlying protocol for the internet, at some point it becomes so embedded in the ubiquitous. It's the idea of something else coming along and replacing the protocol of the internet is not practical or feasible because it's already defines the internet. It is the internet. It's the definition of the internet. So Bitcoin is the definition of digital money or digital gold, and it has established itself now as such after 12 years or so in existence. And there would be no desire to improve upon it because it already does what it says it's going to do perfectly well. There's no shortcomings in what it does. It does exactly what it should be doing, and it does it perfectly well. So there's no need to try to improve it. I mean, the Congress, right now, there's a debate in Congress, and you have Bitcoin, and you have a lot of other coins. And you have Bitcoin, which is proof of work, and a lot of these other coins are essentially what's called proof of stake. Now, a proof of stake coin, which is no different than fiat money. It's just governance by who has the most of it. And that's not an improvement from the current fiat money system. But one of the things that proof of stake coins can do is they can print lots of money for themselves in what's called a pre-mine. So they have a lot of cash to hire lobbyists and to do a lot of marketing. With Bitcoin, there is no pre-mine, there is no center, there is no organization, so there's no lobbying group per se. So it just exists for what it is as it is, and it's being adopted because it solves this fundamental problem as it is. But nevertheless, in Congress, they're being bamboozled by a group of money printing charlatans who are trying to equate what their projects are with Bitcoin, but it's a dead argument. Only Bitcoin is truly decentralized. None of these other projects are truly decentralized. They are centralized to some degree, either relatively or absolutely centralized versus Bitcoin. And the thing about Bitcoin, because it is purely decentralized, truly decentralized, and exists entirely outside of anyone's control or reach or ability to modify or corrupt, is what makes it perfect money and why it's becoming as popular as it is and why the market capitalization is growing as it is. And it's funny, Michelle, because it's almost designed to attract attacks, because the more people attack it, actually there's a phenomenon essentially where the hash rate goes up, the computational power goes up, which means the security goes up, which means the price goes up. So it's a funny thing. It's kind of designed to be attacked, because the more people try to attack it, the more that they spend. It's like a rope-a-dope. Remember Muhammad Ali had the famous rope-a-dope strategy against George Foreman in their famous fight. And this is Bitcoin. It just takes all the blows, and then when these other projects, or it could be gold or it could be fiat money, when they punch themselves out, Bitcoin comes out of the corner and knocks them out. And that's been going on now for 12 years, and it'll keep going on for another 100 years.
We'll get to gold in a minute, but yeah, the anti-fragility argument is what you're pointing out, that the more Bitcoin gets attacked, the stronger it becomes and develops more resistance to whatever is attacking it, if you will. But let's talk about altcoins, seeing as you brought them up. In your last interview here with Kitco in August, you said that altcoins will all go to zero. Do you still hold that view, that they're all going to zero?
Yes, I do, because ultimately it's a game of energy and who gets the energy and who wins the energy race. And Bitcoin is winning the energy race. 85 or 90% of all the energy in the universe of this asset class is already into Bitcoin, and that will keep going up to 100%. So these other altcoins effectively will just starve of energy because nobody will be mining them or maintaining the networks or developing them because that energy is going to be over in the Bitcoin space. So they literally get starved of energy.
But if all altcoins are going to zero, does that imply that all DeFi projects not based on Bitcoin will inevitably fail? Because you have the entire DeFi space based on several altcoins and blockchain protocols that are not Bitcoin. And it sounds like that's the same as saying back in 1997 that all internet companies except one are going to go to zero. So you're saying that there's no future for the entire DeFi, decentralized finance space, unless it's based on Bitcoin?
Well, anything that's decentralized or built on other protocols like Ethereum, for example, they're built on centralized, what I call garbage. So let's take Ethereum for a second. It's entirely centralized. All the servers are on corporate server farms that can be turned off at a moment's notice. The transactions have been reversed many times. There's a huge, like 70% pre-mine, so the founders just dump coins on people all the time. And the things that are being built on Ethereum, like NFTs, are every single day people are waking up to the fact that they're just scams. They're just outright scams. So there hasn't been any useful development on any of these altcoins at all. That hasn't been shown to be an utter scam. And DeFi, these projects routinely blow up. People are constantly getting blown up. They live in a gray area that's outside of all regulations, and there's no reason for them to exist. They're scamming.
But there's several protocols that are not Bitcoin based, and so far we're seeing Ethereum as the gateway to a lot of these DeFi protocols.
Right.
You're ultimately,
just to be clear, Ethereum is an exit scam. Ethereum is a scam. Just to be clear.
Ethereum is a scam because it's centralized?
Because it's 70% pre-mined, and the founders dump coins on. It's a pyramid scheme. Ethereum is essentially a pyramid scheme. It's a scam. Transactions have been reversed. There's never been an audit. Nobody knows how many Ethereum there are. They have absolutely no idea. Vitalik Buterin, who's one of the key guys in Ethereum, has said he doesn't think that scarcity is important in this type of model. He doesn't think that decentralization is important, right? So what's the point of it? It's a scam, and the SEC, Gary Gensler, has yet to come out definitively and say whether or not Ethereum is a security. So we're still waiting for that definitive comment. He may, in fact, and it is a security because it was created with the intention of profiting or making money from the sale of these tokens. That's textbook securities, a security sale. I know because I'm a former broker for many years. I know a security when I see one, and that's a security. And it should be shut down as an unregulated, unregistered security, for one thing. And number two, it's a scam.
Okay, so you're saying that the only coin that's going to be left at the end of the day in the entire DeFi space is Bitcoin, that there's no room for any other altcoins.
Correct.
All right, another bold statement from you, Max Keiser. You're certainly aren't shying away from them today. You mentioned Gary Gensler. Let's focus on him, the Securities and Exchange Chair, of course. And he is saying now that his focus is actually going to be on the trading platforms for cryptocurrencies, the crypto exchanges. He's really going to nail down his focus there. What impact do you think that's going to have? Could it maybe even serve to legitimize the space and make retail investors more comfortable?
Well, my understanding of Gary Gensler and the SEC, a couple of points. First of all, let me say this. I have to point out the fact that there hasn't been an approval of a cash basis Bitcoin ETF. And
that's my next question. We'll get there.
Okay, but it's getting to be embarrassing for the SEC. They do have one ETF, which is a futures-based ETF. And anybody who's in the securities industry will tell you that any futures-based ETF, it's almost, without exception, a horrible product. It's not suitable for anybody. This particular futures-based Bitcoin ETF has performed predictably horribly. And why would they even launch something like that in a retail environment before just doing a cash Bitcoin ETF? So I really have to ask what Gary Gensler's office is up to there. It doesn't look good. It smells bad. It looks like they are dragging their feet in a way that would suggest almost that they are providing cover for those who find this a threat. I hate to see it, but it wouldn't surprise me if that came out. But on the other hand, let's talk about Gary Gensler's comments about Bitcoin. They've been constructive. He sees it as a one-off, as a kind of a unique phenomenon that's unregulatable. That's the horse has left the barn, and there's no going back at this point. So his comments are really, as you say, they're looking more at now the exchanges and how the exchanges operate. Okay, that's more in the bailiwick of the SEC and what their traditional focus should be on how to regulate exchanges. And okay, do your job and take a look at these exchanges. It doesn't, at the end of the day, it doesn't impact Bitcoin, the asset, at all. It may impact regionally how people are trading on exchanges in the United States versus other opportunities in other countries.
What could it be a positive for Bitcoin if it's creating a sense of more security for retail investors that say, I don't want to have a Coinbase account because I don't know what's backing it. I'm concerned that my money could get wiped out. If it does become SEC regulated, then it kind of may allay some of those concerns and perhaps potentially even be a positive for Bitcoin. Do you see that?
Well, what I would say is this, Michelle. The absolute most prudent thing anyone can do when they buy some Bitcoin is to take it off the exchange and to hold it in your own cold storage in a hard wallet or a multi-sig wallet, and don't hold any Bitcoin on any exchange at all. That's because just like when you put money in a bank, the money is technically owned by the bank, right? It's not your money anymore. So when you have Bitcoin on an exchange, you're exposing yourself to risk over there at the exchange, which you don't need to. You just never keep any Bitcoin on any exchange. Always take your Bitcoin off the exchange and self-custody your Bitcoin. And is this consumer friendly? Is it as easy to do? Well, no, it's not. But then again, we're talking about the ability to have a bearer instrument that's accessible only by you, that's unconfiscatable, uncensorable money, and it's incredibly valuable. It's like a Fabergé egg. What lengths would you go to protect your Fabergé egg? You would go to great lengths to protect it because it's very rare and it's very valuable. Bitcoin is similarly very rare, very valuable, and it's going to just get more valuable over time. And it does take a little care in owning it and maintaining it. But to your point, the broader market, the broader consumer market, I see that Google is going to be doing a deal with BitPay, and they're going to be selling some product like a Bitcoin card or something like that, some kind of consumer product. So you're going to see more consumer products and more friendly consumer products, and you're going to see the market expand, and it will increase visibility, and it will increase the learning curve, and people will get more knowledgeable about it. So to that degree, I guess you could say it's a positive, because it becomes more available, and people are aware of it, and then those folks that want to get deeper into it will learn more about it, and they will have that knowledge. So if you're talking about somebody with 50 or 100 bucks in Bitcoin, it doesn't really make any difference. But if you're talking about somebody with a considerable amount of wealth in Bitcoin, they should take a slightly different path, but they naturally will. That's what rich people do, right? They know how to secure their wealth.
You touched on the spot ETF. If we do get a Bitcoin spot ETF, what impact do you see that having on price? And does it make Bitcoin more susceptible to manipulation then?
Right. I guess, the biggest pool of Bitcoin right now would be Grayscale with Barry Silbert. They've got the GBTC. And I think it's got something like 600,000 Bitcoin. And it's trading at some massive discount to NAV of 25% or so. And he's eligible to be an ETF. And that would immediately, you'd see that gap, that arbitrage would close. And that's a pretty sizable event. That would be nice to see. And it's a very retail friendly product. You've got those army of financial advisors around the world talking to people all over the world. And it's very easy to, on a call, to put some money into an ETF, a Bitcoin ETF, to get some exposure to Bitcoin. So it's the Merrill Lynch brokers of the world and those folks would have a product that's very easy for them to sell. Excuse me. And so it would be a positive. As far as the expanding the ability to manipulate price, what we're seeing with Bitcoin, which is unlike, let's say, the gold market, which is notoriously susceptible to derivatives trading and derivatives manipulation. With Bitcoin, you have the ability of the larger players to pull their keys off the exchanges and pull their keys into private storage. So the base layer of any scheme to manipulate through derivatives would be removed, and then that would kind of collapse the derivatives layers that are used to manipulate. So you don't have that with gold so much. With gold and silver, there's a lot of gold and silver on the LBMA and the COMEX, and there's always this threat that people are going to take physical delivery, but they never do, and the schemes just go on because it's not that easy to take physical delivery. It's expensive, and with Bitcoin though, it's just electronic, and you can just very easily take your Bitcoin off any of these exchanges. If you wanted to thwart any kind of massive derivatives attack on Bitcoin, you could just do battle with those guys by taking your keys off the exchange. So they have no base layer on which to build their price suppression schemes. So there's that. On January 3rd, in Bitcoin, there's a movement to take your keys off all the exchanges. So the industry is aware of this, and they're constantly kind of alerting people.
Wait, January 3rd, you said?
Yeah, January 3rd is an annual take your keys off the exchange day holiday, if you will.
All right, Max, I'm going to let you go, but before I do, you have mentioned gold several times, and you used to be a big proponent of gold. You said that you started buying gold back in 2003 as an inflation hedge, as a store of value, as a way to protect against fiat debasement. Have you completely given up on gold with its thousands and thousands of years history?
Yeah, pretty much.
Have you sold your gold?
Yeah, I'm. Yeah, gold out, silver. I'm almost out. I had, so much silver. So it's hard to sell all that silver, to tell you the truth. But hopefully I'm get completely out of it soon. But nevertheless, so at this point of the game, Michelle, over the years now, we've had this discussion of Bitcoin versus gold, and every year now, the case for Bitcoin is superior to gold. I mean, that story gets stronger and stronger, and therefore some of the negatives of gold are more obvious and more disturbing. Gold is, I don't want to get maudlin here, but I mean the images of the way it's mined, the child labor, etc. It's a bit unconscionable. There's a moral.
Well, you do have the ESG movement factoring into gold mining, and at large, the industry is adapting to be more environmentally and socially friendly, if you will, especially to appease, institutions and the big pressure. Even if they don't want to, there's pressure to do so. But okay, I see that you're losing interest in gold.
As you know, a lot of that is cosmetic, and it's public relations, and they talk a good game, but at the end of the day, the industry, whether it's arsenic in the environment for mining or child labor, slave labor, etc., it's still a huge problem, and so there's a morally corrupt element to the gold mining industry that
where is child labor and child slavery in which mining
I think it just
geography is it a
quick
problem
search
for
on
gold
Google.
mining?
It's we're seeing there's regions all over the world. I mean we can dig into it, but I mean there's a lot that goes on there.
So it's a moral argument that you now have.
It becomes more and more troubling because the alternative for Bitcoin is one that should be considered in that context. And that's, I think, something that the big gold bugs like Frank Giustra, for example, they're blind to that aspect to it and the moral considerations.
But let's assume that it's not just cosmetics, right? Let's assume that there is a bigger push for the ESG movement. There are more organizations that are actually looking into it and verifying it. Why would you give up on gold completely? Why not diversify? Why not hedge a little bit and keep some of your gold?
Well, because it's, as Paul Tudor Jones has said, it's the fastest horse in the race. So it's going to outperform gold for one thing. And number two, it doesn't have that baggage. So why would I don't need to carry that baggage, and I'm going to outperform gold. So what is gold going to offer me? It just gives me a lot of.
You could say gold can offer you the security of thousands of years. So why not diversify? Why not have Bitcoin by all means, but also keep some gold? What's the argument against that?
The horse was the primary mode of transportation for 3,000 years. Then the car came around, and we don't have horses anymore. So the step change with Bitcoin is multi-thousand year in nature. It's profound and it's huge, and it's a new world. And Bitcoin, and it's proving itself every month and every year. I mean, this argument is even 4 or 5 years ago would not be as clear as it is today. But now, with countries making it legal tender, with corporations piling onto it on their assets, on their banks' reserves, with the hash rate, hitting new all-time highs, 200 quintillion calculations per second, all the fundamentals are strong. It's now irrefutably better than gold, and just in everything across the board. So I can't justify owning any gold and silver at this point, given all that baggage it comes with, and it's not even going to outperform Bitcoin.
So you're all in on Bitcoin. You're diversifying fully away from gold and silver. Max, seeing as you've been so bold in your predictions, I know you've put it out there, but where do you see Bitcoin ending this year?
Well, Bitcoin was the best performing asset last year. It was the best performing asset, it'll be the best performing asset again this year. I mean, what was it up? 70% last year? It towered over everything else. I had a $220,000 price prediction for 2021. Obviously, that was not met, but it was up considerably, and it was the best performing asset in the world. So I'm just moving that to 2022 for all the same reasons that I liked it in 2021. I'll say you're going to hit 220,000 in 2022. All the underlying fundamentals are still there. The price direction is correct. If you get direction correct and you're roughly correct on timing, that's pretty much, you can't ask for more than that, Michelle. As far as pinpointing an exact date with an exact price, okay, that's a little trickier. But I don't trade my Bitcoin. I'm not a trader. I hold it, and I hold it forever. If I want to use it, I can borrow against it. I'm not going to spend it. It's an asset that'll be with me for the rest of my life. I will never spend any of my Bitcoin.
You're kind of countering your own argument that it's a viable currency then for transactions, but perhaps not same applicable to you as it is to people in El Salvador.
There's the different applications and usage for this digital synthetic commodity. And in my case, I'm in a position where I can be a hoarder, I can be a saver of Bitcoin. In my case, I'm not the average person. I don't think. So.
You're certainly not. You are certainly not the average person, Max Keiser, and I get your point that it's individual specific the way one should handle one's Bitcoin. I thank you so much for spending all this time with us. I really appreciate it.
Okay, well, Michelle, great to see you, and we'll do it again sometime.
Absolutely. Thank you so much, Max. Max Keiser, really appreciate it. Thank you.